Hey folks, welcome back. It's been a few months since my last video, but I'm getting back into things now. So today we're going to look at, first of all, the primary two reasons why I only invest in dividend stocks, and then we're going to take a look at where the portfolio stands from when we last looked at it in November. So first, onto the two reasons why I only invest in dividend stocks. So why is it I only have dividend stocks in my portfolio? So I'm going to break this down into two main reasons. Now, the first reason is kind of a reason that you would have with any stock, hopefully, and it's primarily that the appreciation of the stock, right? So that the stock would go up in value. So you buy it at a certain amount, say you buy it at $10, it goes up to $20. If you sell it, you make a profit, right? So this is broad across all stocks. You know, the idea is to make a profit on the stock. Now, the real difference between just buying a stock that doesn't pay a dividend and buying a stock that does pay a dividend is the dividend snowball. So what do I mean by this? So when you buy a dividend stock, not only do you hopefully get the appreciation of the stock, i.e. the value goes up, but you'll get paid a dividend on a monthly, quarterly, or yearly basis. Then the snowball comes is when you get paid those dividends on a quarterly, yearly, whatever basis, is you reinvest those dividends into the stock, and then therefore you buy more of the stock by owning the stock initially, right? So really, this becomes really powerful over time because of the compound interest effect, right? So if you don't take that money, directly into your bank account and spend it, and you put it back into the stock, the next time you get a dividend, you'll get an extra share or an extra 0.1% of a share, and then therefore you get more dividends. So it keeps going on and on and on and on. You're constantly increasing your stocks in the company, and then you're increasing the dividend you're getting from the stock. In my last update, I believe the portfolio was around $2,500. Currently, we're almost double that with $4,317. Now, the only change to the portfolio in terms of the stocks that are in it is I've added one more, and that addition is Altria. So Altria have a really competitive dividend yield, which is like 8 point something percent, opposed to some of the other stocks. So I'm going to walk through now briefly each one of these stocks, how many shares I own, and what value it's at. So in Federal Realty Investment Trust, essentially a REIT for properties where they rent out properties, lease out properties, and then pay a dividend to their stockholders out of that, I have 1.3 shares to the value of $109.83. Next up are the two energy providers or oil or petroleum companies that I own, which is Chevron and Exxon. So in Chevron, I have 1.7 shares to the value of $173.93. And then in Exxon, I have 2.3 shares to the value of 233 cents. Now, Chevron is currently down at the moment and Exxon is up. So I think since I bought Exxon, I've actually had a profit like all the time in Exxon. Next up, we have one of my larger holdings, which is Coca-Cola, with 13.4 shares to the value of $761. So Coca-Cola, I think, is known as, it's a dividend aristocrat. It's a very common stock in dividend portfolios. It's a good yield. It's a good company. It's been around for a long time. One of Warren Buffett's major investments as well. Next up is 3M with 1.2 shares to the value of $108. Now, 3M has seen better days. They're currently in a lawsuit, I believe, with the US military due to defective ear headphones or something in combat. So besides that, though, they have a strong kind of moat. They make a lot of common items that, from sticky pads to like glasses to all this kind of jazz that people, they're kind of, are necessity items. So good stock to own. Next up is a gold standard, blue chip stock, Microsoft, with 2.2 shares. I'm currently up on this as well. So there's $566 in value of that. So that's one of my larger holdings as well. Here we have two of the larger tech stocks I own as well. So we have Intel with 14.8 shares to the value of $436. So Intel is a bit of a kind of a weird choice. A lot of people tell me at the moment. So Intel appears to be on the way down, right? But my philosophy on Intel is, number one, they're cheap at the moment to buy. You can get a lot of shares. And they're getting a lot, like billions, if not trillions, in funding to start their own fab for chips and stuff in the US, right? They've also just, I think it was just yesterday, was announced their timeline for their higher quality chips has actually been sped up, right? So I'm almost in profit on this one, whereas I've been negative for a while. Next up is Apple. I don't think I really need to explain Apple choice, right? The dividend yield is low, but it's a kind of a safe stock, right? So 2.3 shares, $336. And then I have a UK stock. So most of my stocks are US, whereas Kellogg's is in the UK, which is a provider of kind of like, you know, cereals and bars and things like that. So I have 4.8 shares in that, $294.81. So some of my newer buys here. So T Rowe Price up the top, 1.1 shares, $111 in value. T Rowe Price is like an investment company, so it's very similar to what I'm doing, right, where I'm investing in stocks. They invest in stocks within it, their company, they pay a dividend from their profits, etc. Altria is my newest one, so 6.6 shares, and I think in my next cycle I'm probably going to buy more of these with the 8% plus dividend yield, so to the value of $271. I haven't got a dividend from that yet, but I think next month, April, will be my first dividend. And then my only monthly dividend pair is Realty Income with 6.1 shares and $352.86 in value. So I think Realty is a really good one to have in your portfolio. Similar to the previous one I was talking about, the Federal Realty Investment Trust or whatever it was called. They rent out, you know, stores and apartments, etc., and then they pay a dividend from that, but it's monthly, right? So you're going to get your return a lot quicker than, say, the quarterly. My final three here, number one is Kroger with 2.2 shares and $100.78 in value. So Kroger, and they just bought another chain as well in the US, are a kind of a supermarket chain, one of the largest ones in the US. So, you know, these are necessity goods, so it's always good to have these in your portfolio. The next one up is Walgreens, Boots and Lions. So Walgreens in the US and Boots in the UK and Europe and kind of Ireland. So I have 13.1 shares in this. Good dividend yield, $418 in value. Amcor is kind of a random one I picked up because it was cheap. So I have 4.4 shares in that with a dollar value of $44.63. So they make kind of packaging qualities. So, you know, kind of the packages and stuff you maybe get from Amazon, you know, the cardboard boxes or the plastic or the styrofoam, they make that kind of equipment and that kind of quality stuff. So next up, I'm just going to talk about the dividends that I've gotten in total and in the last cycle since my last update. So how much have I made from these stocks? Now, bear in mind, the last time we did the update, I had made some dividend income, which I'm going to display here. And I had also only had 2,500, which were almost double that amount in the portfolio value. One thing I'd like to highlight as well is with dividend stocks, it doesn't really matter whether you're, well, you know, to a degree, it really doesn't matter whether you're up or down in the overall like appreciation of the stock or depreciation, because they're going to pay you the dividend anyway, right? So you're still making money. So in this period since last November, I believe it was about November 19th that I did my last update, I've made $34.25, okay? And in the overall, in total, including from, I believe it was from July to November when I did and then November was the update video, I made the rest. So in total, I made $41.83. So overall, I think the portfolio is looking pretty good. I'm going to hit a milestone pretty soon, going into next month, of hitting $5,000 invested. So that, and even when I got to 4.5, it really boosted the dividend income that I've been getting from these stocks, whereas I was only getting a small bit before. You know, I'm getting in, you know, even though it's still quite small, I'm getting, you know, $10, $20, $30, $40 now, whereas before, you know, I might have been getting like $5 or $8, right? So it's coming along. So talking about kind of future and my aims, by the end of the year, I would hope to have, you know, depending on how things go, up to maybe about 10,000 invested, and talking about as well, you know, where I want this channel to go. I obviously didn't make a lot of videos in the last month, but I'm hoping to kind of stick to the monthly cycle. I quite enjoyed doing this video, and I have a couple of ideas for different styles of videos, not just doing updates, but, you know, talking about maybe different concepts like dividend snowballs or compounding interest, etc. I'm also very open to questions if you want to ask a few questions in the chat. And thanks for watching, and I'll see you in the next one.